Active fund managers are like deer caught in the headlights of oncoming traffic.The exchange-traded fund (ETF) industry is expanding its product range to all investment strategies and grabbing market share from the mutual fund sector. In an important milestone, in August 2019, passive U.S. equity funds surpassed their active counterparts in assets under management (AUM). Active fund managers can't compete with ETFs on cost and achieving alpha in an increasingly competitive industry through fundamental analysis and other traditional tools is a prospect that grows dimmer each day. But active fund managers hold one trump card over the index funds, quants, and artificial intelligence, AI. They know company and industry fundamentals better than anyone. And that's especially true of the sector specialists who have spent years debating strategy with management, touring company assets, learning about customers and supply chains. This knowledge may not be that useful in forecasting asset prices, but what if these managers applied it as activist investors? Not every fund manager can transform themselves into an activist investor. Individuals, or groups, buying large numbers of a company's shares or trying to obtain seats on the board to trigger a significant change within the company, often focusing on cheap and poor quality stocks that are ripe for change, just like those that private equity investors target. But some may possess the skill sets to make the leap. And whatever the odds, it beats watching ETFs erode their market share. Of course, activist investing isn't a new phenomenon, so fund managers may want to explore its track record before taking this path. Trends in shareholder activism. Carl Icahn, Bill Ackman, Paul Singer and other activist investors have become almost household names in their native US. The battles Ackman fought against Herbalife, and Icahn, or Singer against Argentina, are the stuff of legend. Finance doesn't get any more colorful than a company compiling secret dossiers on an activist investor or a hedge fund seizing a warship off the African coast after a court ruling. Such incidents aside, the number of companies targeted by activist campaigns has remained flat over the past 4 years. Although Japan, among other nations, has grown more shareholder-friendly, the environment for activist campaigns in most countries is distinctly unwelcoming. Therefore, activist investing is largely confined to the United States. As assets have flooded into passive, the structure of ETFs and index funds have made it more difficult for institutional investors to challenge company management. That's where activist investors ought to come in. They are useful tools for policing stock markets. Yet, just as the number of firms targeted by activists has remained flat, so too has the AUM of activist hedge funds. Despite the growth in ETFs and increased need for more on this story, visit the news article link.